Tesla's future in Europe is looking shaky, and a big reason for that. New trade tariffs introduced by U.S. President-elect Donald Trump. Ever since these extra taxes kicked in, the U.S. stock market has taken a nosedive, hitting its lowest point in years. Tech companies in particular are feeling the heat, but Tesla seems to be in the most danger. Over the past few months, Tesla's sales have been slipping, not just in the US, but across Europe and Asia too. Some experts believe this is all part of a growing trade battle, one that Elon Musk initially seemed to back. Musk has been a vocal supporter of Trump's policies, but as Tesla's stock value continues to drop, it's starting to look like he might be rethinking that stance. The bigger question is, are these tariffs really the main reason for Tesla's troubles? And if so, what does that mean for Musk and his other companies? Let's break it all down and take a closer look at what's really happening behind the scenes. The US stock market took a major hit this week, sending shockwaves through Wall Street. Bitcoin tumbled, and investors' fears skyrocketed to the highest level of the year, all fueled by growing uncertainty over President Donald Trump's economic policies. The market opened deep in the red, and things only got worse from there. By the end of the day, stocks had dropped across the board. The Dow sank 890 points, about 2.08%, after briefly clawing back from a terrifying 1,100-point plunge. The S&P 500 slid 2.7%, while the tech-heavy Nasdaq suffered a brutal 4% drop. It was the worst trading day of the year for both the Dow and the S&P 500, while the Nasdaq hadn't seen a single-day loss this bad since September 2022. This slump erased every bit of stock market progress made since the U.S. presidential election in November, leaving investors rattled. And the biggest reason? Worries over how Trump's tariffs might shake up the economy. When asked about a possible recession, Trump stayed vague, saying the U.S. is going through a transition period, and that the changes underway are massive. "I hate to predict things like that," he added, refusing to rule out economic trouble ahead. Tech stocks took the hardest blow, dragging the entire market down. The S&P 500 ended the day 8.6% below its peak from February 19th. The biggest losers? The so-called Magnificent Seven tech giants, Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, all suffered heavy losses. Trump's refusal to take recession off the table has made nervous investors even more anxious, explained Anthony Saglambine, a market strategist at Ameriprise. Despite the chaos, the White House remained upbeat, insisting that Trump's second term would bring record-breaking growth. Officials pointed to massive corporate investments in response to his America First policies, tariffs, deregulation, and a focus on domestic energy that they say will create thousands of jobs. Trump delivered historic job growth in his first term, and he's on track to do it again, said White House spokesperson Kushner. But how did all of this impact Tesla and its outspoken CEO, Elon Musk? Tesla shares plummeted 15.4% on Monday alone. After surging following the November election, Tesla's stock has now plunged nearly 45% this year, wiping out all of its post-election gains. Tesla's stock has taken a beating lately, and the reasons are piling up. Sales are slipping in Europe, and CEO Elon Musk is facing backlash over his close ties to the Trump administration. But it's not just government officials and critics who are frustrated. Investors aren't happy either. At first, it looked like Tesla was headed for a big win. After Election Day, the stock soared 91%, peaking just before Christmas. Investors were betting that Musk's influence in Trump's second term would be a major boost for the company. Musk, who is Trump's biggest campaign donor, has now become one of the administration's most powerful figures. As head of the Department of Government Productivity, or DOGE for short, he's pushing for deep budget cuts and mass layoffs in the federal workforce. But things took a sharp turn. Tesla's stock has now dropped 5.6% in trading, wiping out nearly all of its post-election gains. Since Trump's inauguration and Musk's rise to power, the stock has lost 38% of its total value. Investors are getting nervous. Musk's role in the White House, turned out to be far more hands-on than many expected. Instead of quietly advising on economic policy, he's front and center in major decisions, making him a controversial figure. Some thought he would focus on running his companies, Tesla, SpaceX, Neuralink, and X, instead of diving headfirst into politics. But Tesla's struggles suggest his involvement with the administration is making waves, and not in a good way. Beyond Musk's political headaches, Tesla is facing stiff competition from other car makers, especially in China and Europe. Rivals are gaining ground, making it harder for Tesla to keep up. Whatever the cause, Musk's political ties, competition, or both, it's clear that Tesla's falling sales are dragging its stock down, and there's no obvious solution in sight. While electric vehicle sales in Europe jumped 34% in January, Tesla's sales plummeted by 50%. In China, Tesla's second largest market after the US, sales dropped 29% in the first 2 months of the year. Back home in the US, sales slid 16% between December and January, according to Cox Automotive. But figuring out why is tricky. Tesla's sales often dip at the start of the year after a big end-of-year push to hit financial targets. For instance, January 2024 sales were 24% lower than in December 2023. Globally, their sales are booming, said analyst Gordon Johnson. In China, Tesla is losing ground to competitors. In the West, people seem to be turning away from the brand for different reasons. Either way, it's bad news, Johnson added. And with no real progress on full self-driving, Tesla's in trouble. Some investors believe this could be the year Tesla's stock takes a major hit. Even longtime Tesla optimists are starting to lower their expectations. Gene Munster, managing partner at Deepwater Asset Management, put it this way: investors are starting to rethink what Tesla's deliveries will actually look like this year. Just a few months ago, Musk predicted deliveries would grow 20% to 30% by 2025. Just a month ago, Elon Musk didn't bring up Tesla's old sales goals, which made investors and analysts suspect that those targets were quietly abandoned. The real question now, one analyst put it, is how much of Tesla's stock drop is actually because of Musk's growing political presence. Before the election, it wasn't clear how big of a role Musk would play in a Trump administration. Some thought his involvement would be minimal or even non-existent. But at this point, many Tesla investors believe Musk holds more influence than Trump himself. And that's starting to damage the brand. Over the weekend, protests broke out in front of Tesla stores across the country. One person was even arrested in Loveland, Colorado, facing federal charges for violent acts and carrying dangerous materials with the intent to target a Tesla store. Perhaps the clearest sign of shifting consumer sentiment comes from new sales data released by S&P Global Mobility. This data tracks Tesla sales by state and splits them into two categories: blue states, where Democrats have won the last 4 presidential elections; red states, where Republicans have done the same. Within those groups, analysts measured Tesla loyalty rates, the percentage of households that bought another Tesla after already owning one. In blue states, the percentage of repeat Tesla buyers dropped from 72% in late 2023 to just 65% by the end of 2024. In red states, the number barely budged, ticking up from 47.6% to 48.2% over the same period. This drop in blue state loyalty caused Tesla to lose a full percentage point of its market share in those areas, places that include key car markets like California. Meanwhile, a Morning Consult survey last month showed that 32% of U.S. buyers now say they wouldn't even consider buying a Tesla. That's a big jump from 27% a year ago and just 17% in early 2021. On the flip side, only 16% of surveyed buyers said they were very likely to consider a Tesla, a number that hasn't changed in 4 years. Beyond surveys and sales data, backlash against Musk is popping up in everyday moments. Social media has been flooded with videos of Cybertrucks getting booed during Mardi Gras parades, and police escorts were needed to keep crowds away. Some posts have even celebrated acts of vandalism against Tesla stores and vehicles, But the concern isn't just about losing liberal buyers who dislike Musk's politics. There's growing worry that Musk is spending less time actually running Tesla, said analyst Gene Munster. After all, Tesla isn't his only priority. Musk is also CEO of SpaceX, the largest shareholder of social media platform X, and the founder of AI company xAI and brain chip startup Neuralink. Musk has completely changed what people expect from a CEO, Munster added, but even he has limits on how much he can juggle at once. There's only so much he can handle, one analyst said, referring to Elon Musk. And with tensions rising between China and the US, some believe Tesla could soon find itself caught in the crossfire. According to Isaac Stone Fish, CEO of the business intelligence firm Strategy Risks, China has significant leverage over Musk and Tesla. The Chinese government has a history of using business relationships to its advantage, either granting favors or taking them away depending on its interests. However, not everyone sees Musk's political connections as a disadvantage. Some argue that his close ties to Trump could actually give Tesla an edge. One of Tesla's biggest selling points is its full self-driving FSD system, which can handle certain maneuvers but still requires drivers to stay behind the wheel and be ready to intervene. Despite continued safety concerns and investigations by the National Highway Traffic Safety Administration, Musk has been pushing hard to take autonomy to the next level. Last June, he boldly promised that Tesla would soon have fully self-driving cars operating as part of a ride-hailing service in Austin, Texas, Tesla's home turf. But in reality, competitors like Uber and Alphabet's Waymo have already beaten him to it. Waymo has launched a self-driving taxi service in the city and expects to expand further next year, rolling out vehicles with no steering wheels, brakes, or gas pedals. Even with these setbacks, some investors still believe Tesla has a bright future. They see the current stock dip as a golden buying opportunity, betting that self-driving technology will be the company's real moneymaker. Musk has Trump's support, and that means he'll get the green light to prove robo-taxis are safe. One expert said, "I think it's only a matter of time." Not everyone is convinced. Analyst Gordon Johnson remains highly skeptical. Musk has been saying for over a decade that full autonomy is just around the corner, Johnson pointed out. But if he fails to deliver again, Tesla's stock could take another big hit, especially when first-quarter sales numbers come out in April. Meanwhile, other big names in tech aren't doing much better. Nvidia dropped 5%, while Palantir, one of the biggest players in AI, plunged 10%. When stocks shoot up too fast, they can just as easily crash back down, said Gina Bolvin, president of Bolvin Wealth Management Group. Even Bitcoin took a hit, falling to $78,000, its lowest level since November, as investors pulled out of risky assets. The market turmoil has been fueled by uncertainty over Trump's tariff policies. The S&P just had its worst week since September. The president recently announced sweeping tariffs on imports from Canada and Mexico, only to delay them until April 2nd. He also doubled tariffs on all Chinese imports from 10% to 20% and enforced a 25% tariff on steel and aluminum starting March 12th. Adding to the confusion, Trump hinted that he might hold off on imposing a 250% tariff on Canadian dairy and a heavy tax on Canadian lumber. Just talking about tariffs is sometimes worse than actually enforcing them, said David Barnson, chief investment officer at Barnson Group. He believes the uncertainty alone is enough to slow down the economy for at least a couple of quarters. In the end, he predicts a deal will be made, but it'll leave people wondering why there was so much drama in the first place. The impact isn't just hitting the stock market. Across the country, layoffs are rising, hiring is slowing, and inflation is creeping up. The yield on the 10-year U.S. Treasury bond fell to 4.225%, a sign that investors are flocking to safer options, nervous about what's coming next. All eyes are now on upcoming inflation data to see whether prices remained stubbornly high in February. A recession is usually defined as 2 straight quarters of economic decline. The Business Cycle Dating Committee, which officially tracks U.S. recessions, says that a true downturn involves a widespread drop in economic activity that lasts several months or more. How long this uncertainty lasts depends on how quickly trade tensions ease and whether the looming recession actually hits, said Sam Stovall, Chief Investment Strategist at CFRA Research. Did you appreciate this content? Please do well to like, subscribe, and activate the notification bell so as to stay informed and updated on our video release. Thank you for watching.